Tēnā koutou. Very glad to be here. That wasn't me just exerting a power move to sit in the middle. That was just so that I can see the questions that you're no doubt going to send us throughout the course of this, and we'd love to hear from you. And if there's anything you want to know, please feel free to ask the panel. So the topic of this panel is around fintech and AI, with a side diversion at the end into cybersecurity. And we're happy to sort of take questions and talk generally in that wider context. So what is fintech? I like to think of fintech as being using technology to supercharge the delivery of financial services. What is AI? AI means the robots are coming, Skynet, Arnold Schwarzenegger, and generally just using technology to supercharge the delivery of financial services. So I think it ties together. It's an area that I've been very active in and busy in over the last couple of years, and our firm, Minter Allison, has a joint venture in the AI space as well, McCarthy Finch. So it's certainly something that we're quite passionate about. What I'm going to do is I'm going to not give a lengthy spiel about each of the panelists. I'm going to ask them to introduce themselves and give their 30-second to 1 minute elevator pitch, which is really the sort of short step up to the veranda pitch, I guess, in relation to who they are and what they do and why they're here. So should we start with Tim down the end?
Thanks. I'd actually prepared 90 minutes just on myself, but I'll trim it down for you. So I'm Tim Warren. I've got a background originally as a software developer and very much in the security area, and then spent 10 years in financial services, including becoming COO of JB Ware, which is where I met Andy actually. And since then I've got heavily involved in the startup industry, so I'm an investor in about 25 different startups, about a third of those related somehow to the financial services industry. And now I have my own startup, which is called Ambit, and we are a conversational AI platform, and we build chatbots for people like KPMG and Vector, and maybe your brand too soon, Andy. That's enough about me.
Great.
I'm Andy. I'm a partner at PwC. I'm the financial services sector lead for New Zealand, and also lead the innovation practice at PwC. My perspectives that I bring to the table come with a background of having been a fintech startup owner, an executive in one of our main banks within financial services in New Zealand, and now a professional services consultant. So some days that's really confusing and scary even for me, but most days it allows me to bring quite a balanced view of the different tensions and issues to the table.
Kia ora, I'm Brooke, one of the co-founders and CEO of Sharesies. My background, I was in finance. I worked at Kiwibank for a while and managed their savings, transactional and international products, and then moved over to Xero, and then joined the startup land and helped create Sharesies with 6 other founders.
Hello, Jack Dwight. I've been with FNZ since 2005, since its inception, and today we have about 6.5 million customers. The reason I mention that is my job is to leverage that rich data set using technology like machine learning and AI.
Jeff Ward-Marshall. I'm in DLA Piper's corporate and financial services team. I'm a lawyer. Started out life, as I think some of you did, at AXA. And then moved, having looked after some of their life insurance-backed funds, moved to Guernsey, where I spent far too long doing much more interesting funds. FMCA came in. I thought that was a good idea to move back to New Zealand, and been with DLA doing fintechy things for 3.5 odd years now.
Great. And I'm going to start by throwing to Brooke to talk about what does fintech mean to you, and in particular, where does Sharesies fit within that frame?
Yeah, I think you summarised what fintech is quite well before. It's the power of, using the power of technology to transform the financial services that are available today, and really it's about how do we get awareness and engagement in financial services. So for Sharesies, what we really focus on is how can we make wealth opportunities available to all? Like, how do we create more of an inclusive environment when it comes to finance, and how can we ensure that Kiwis know that investing is accessible to them, and that it isn't daunting. You don't need to know all the jargon, and putting the power into the people rather than the power being with the amount of money that you have. So that's kind of a bit about, I guess, how we see what we're doing as a fintech. It's really how can we make investing as accessible as possible and create a really engaging platform and make investing as easy as online shopping. And that's essentially the kind of way that we use the technology.
Brilliant. Now, as professional service providers, perhaps, Andy, do you want to talk about what kind of clients you're seeing in this space and how they're using the technology for their benefits and how they're working with you?
Yeah, sure. It is a complex one because we are increasingly working with small fintech companies who are wanting to grow their company, and they're looking for our advice and guidance on how they actually set up, structure, fund their company, how they put in place governance, etc. Then also, we are partnering with fintechs because like any organisation represented here today, we need to disrupt our own organisation and think differently about how we're delivering services to our clients, and technology is a big part of that. And then the third piece of it is increasingly our engagements with clients from a consulting point of view. We will be working with a board or an executive team and a range of different technology companies and fintech startups, and our role becomes really how is the enterprise strategy driving decisions that they're making on partnering with fintech startups to actually deliver faster and better and cheaper to their customers and their markets. So we're seeing a broad range of startups, and it's everything from startups and fintechs that are solely focused on building better customer experiences, those that are offering mechanisms that can help organisations be more cost effective and cost efficient. One of the key things here is I think all FS organisations are looking for startups that can help them take friction out of the complex processes and environments that they've created. So broad range of fintech startups.
Great. And Jeff, is there anything you'd add to that from your client base? And are you helping them with different problems, particularly around, say, the regulatory issues associated with fintech?
Yeah, absolutely. Being a regulatory lawyer tends to dictate the sort of work you get. I'm primarily dealing with financial services regulation and its impact on fintech. I see fintech's a fairly broad church. I had a client I was meeting yesterday who described himself as a bit of a fintech fraud because he deals in transfers of data. His clients happen to be banks and financial services companies, but they could equally be government institutions or hospitals. I think I was walking around all the stores outside, and every single one of them could be described as a fintech provider. So the type of clients we're getting range from startups looking to have a new business model, fund custody on an online cloud platform, cryptocurrency exchanges, right through to the larger incumbent institutions looking to not be disrupted, how they structure their corporate venture capital arms, how they start thinking like venture capitalists, even though they are a bank, and how they execute like a startup without stifling the entities that they're investing in.
Yeah, I think it's very important to think both in terms of the startups and also what fintech means for some of the larger organisations. But can we talk about a wider fintech ecosystem in New Zealand, and if so, what is that made up of in terms of industry bodies or other providers? Brooke, I see you nodding. Do you want to comment on that, or?
I think you're kind of referring to the Kiwibank Fintech Accelerator, or
why don't you tell us about your experience going through that process?
Yeah, sure. So in October 2016, as I said, 7 of us got together and we were like, well, why is investing so damn hard? And started doing heaps of research on that and found out that the majority of New Zealanders want to be investors and they can't be because they're priced out, left out and jargoned out. So we thought the Kiwibank Fintech Accelerator was a prime opportunity for us to quit our day jobs, and 3 of us, so Sonia, Layden and I, went full-time to really tackle this opportunity that we saw. And it was really helpful that Kiwibank were a sponsor of it and also was Xero, so they gave us extended leave, so that was quite good to hedge our bets, I guess. And we went all in, and I found the Kiwibank Fintech Accelerator to be really helpful, probably because we had 2 key, decisions that would make or break Sharesies at that time. One was regulation, like what is a way that we could get a product off the ground quickly so we could test whether this was an opportunity we should be looking at in a way that really is in line with the regulatory framework. So we obviously got to meet you really early on and come up with how that could be structured, and the FMA were really supportive, and PATA really opened doors throughout that program too, which was great. So what's really interesting about the ecosystem is, there is a lot of cross-collaboration, and really, the doors are always open. In the early days of creating Sharesies, I was so surprised about how many people were just so willing to talk to us and have their doors open and give us advice, and that has really helped us to where we are today. And so that was the first key reason why we went in. And then second was investment. We knew, okay, well, if we needed to do this, we would need Fintech. There's quite a bit of capital you need in order to achieve the dreams that we had. And so having access to how we would go about getting investment was really helpful.
That's great. I'd like to pick up on one aspect of that, which is in terms of the ecosystem, the importance of the Financial Markets Authority, the FMA, in terms of enabling and their attitude to that. So perhaps, Jeff, maybe have you got a view as to how you've dealt with the FMA in terms of some of the trickier regulatory issues arising out of fintech?
Yeah, I'm going to assume that Rob Everett's still in the room, so
That'd be nice.
Yeah, I'll be nice. I found the FMA to be an absolutely fantastic and open regulator when dealing with new initiatives. It's unlike other jurisdictions I've worked in, the ability to pick up the phone and talk to the actual decision maker at the regulator here is a fantastic thing. And they are open and they are encouraging, and I think that's driven by the fact that the legislation says that they need to be innovative and support that. Examples of the way the FMA has done that is their reaction to industry and consumer demand for Roboadvice, bringing in the early exemption. Their guidance on cryptocurrencies is, I think, world leading and pragmatic, and not wanting to stifle innovation, but to support it and ensure that it's done properly. So I think the FMA is doing a fantastic job. And I'd also add, in terms of the ecosystem, and having shown my face and felt quite awkward at a number of blockchain meetups, it's always good to see MB and the FMA there as well. They also wear ties to these sorts of things.
I should do a shout out to James Brown, I think, who's here as well, from the Fintech NZ organisation, which is also another good body which works to bring together a lot of people in this space. Maybe I'll throw back to Andy. Is there, how do you sort of stay in touch with the sector in New Zealand? And maybe you can sort of move on from that into, particularly through your global networks with PwC, how do you stay in touch with what's happening globally?
Look, to just build on the comments that he made, what's an ecosystem, right? It's a collection of a lot of different players coming together to try and, I believe, accelerate and create positive tension in the market through supporting some of these young, innovative companies that are starting up. So, there are some funding things in place that we're doing. There are some of the work John Holt's doing with the landing pad type organisations. There are incubators. There are FMA's doing some great work. Is enough being done? Never, because it will be an evolving journey. There'll be more and more fintechs. They'll be becoming more and more ambitious. So I think it's always going to be an evolutionary journey. But when I look overseas throughout our international network, we're doing great things, and we're doing the same things as some of the markets overseas that we look to as exemplars. We're doing the same things, albeit it's just a bit harder in New Zealand because of the scale. Overseas we see increasing amounts of money pouring into fintech startups from VCs, $25 billion last year. And that's not going to slow down anytime soon. So I think I'm interested to hear from Tim, but we've got the right ingredients in place. We need to not consider ourselves to ever be finished. We need to keep evolving the ecosystem, inviting all sorts of organisations, big and small, into that ecosystem. Communication, the last point I'd make, communication's key. I still do talk to too many fintech startups who think that they have to work on their own, and that the problems that they're having, or whether they're people problems, financial problems, whatever, that they're unique to them. They're not. We need to not only build out the right players in an ecosystem, but build out much better ways of supporting communication between startups.
Yeah, KPMG put out a report 2 years ago on fintech globally, which asked the question of will startup fintechs eat the big banks and financial institutions' lunch? And they came to the conclusion on their research that no, that wasn't going to happen because the big banks have fairly entrenched advantages, but it was all to play for in terms of partnering between both the big and the small ends of town. Now, before anyone thinks that I've been ignoring Tim and Jack, we'll throw to them for moving on to the AI part of it, at least for now. And we have got some questions which are starting to come up. So the first question, which I'll go directly to Tim on, I think, will AI ever be able to replicate EQ? We do like an acronym in this industry, so.
It's a fascinating one. And what I'm doing, we do a lot of conversational research, and we try not to be a technology platform, a technology solution, but a communication solution. And one of the key components of communication is actually understanding what's going on for the other person. And in a business context, in a private context, it's all really important. And it's all the stuff, a lot of the time, that isn't said. And it's why it's entirely different being on stage on a panel from having a phone call about the same kind of topic. You react in a different way. So machines can do quite a lot of things, and I think the question was well asked because it said replicate as opposed to replace. And so the point is replicate it. Can we replicate certain aspects of conversation with machines to the extent that people aren't aware it's a machine? Well, that's quite tricky. That's the black box Turing test kind of thing. In a specific case, it can be done, but in a general case, it's pretty easy to work out if you're talking to a machine or not. And the really easy way is to see what level of empathy it has.
Yes, the question is, in a few years' time, will we even care whether we are talking to a human or...
That's the next component, is do you care? So when we're designing conversations, we look at, what is the audience that we're going to be talking to, and we can treat it differently based on the age of the audience, because we can usually get that information. You just ask them in a conversational manner. So you can have adaptive conversations based on people's demographic, for instance, but you can also respond to their sentiment if they're upset. So you can start to bring in components of EQ. Now, it's very basic, but what you said is do we care? At the moment, people kind of do care, but you get to a hurdle where people still know it's a machine, but it's good enough. And then people kind of let down. They're like, right, let's just go with it. And the thing is, you see, when people interact with artificial intelligence, they always test it. They say, oh, where were you born? What's your mum's name? What's 2 + 2? And they test it a bit, and then they're like, okay, let's just get the job done. And so we're kind of not quite there yet, but I'd say in a couple of years, people actually won't mind that much. As long as you make it clear, I think it would be unethical not to say you're dealing with a machine.
Look, just on that too, I think we can never fall into the trap of thinking that the next generation and the one after are going to behave the same as us or have the same requirements or values as us. You know, we're moving into an age where consumers of our products and services, companies in the room, a lack of friction, convenience and relevance to me right here now in terms of the offering and the price, that becomes much more important to me than potentially whether I'm dealing with a person or an AI-driven bot.
Sure. Jack, do you want to talk about what AI means for your business or how you see it helping financial services institutions?
Yes, so first of all, I think there are a couple of trends that we've seen, particularly in Europe, that I think are relevant here. So we're seeing thinning margins on activities which are not relationship-based or creative. So, we think there's an economic incentive to get into AI, and we're also seeing kind of demographic changes. So the kind of millennial segment is much more receptive to automated decision making. And thirdly, if you're a data owner, you're in a tremendous competitive position of being able to create products that others can't. So there's a strategic reason as to why we would get into this space. But to answer your question, that I think the areas we're most excited about in financial services are one, marketing. So the approach to marketing today is relatively primitive, and we specifically focus on asset manager marketing. You sponsor the Super Rugby, or you put up a billboard in a ski resort. It's not targeted, it's not measurable. So that's a big area for us. And then consumer or investor safety is another big area. So fraud is a problem that is far, far, far better solved with AI. And then finally, at the consumer level, we're seeing a much more predictive and personalised experience, and for us that means, ultimately financial advice. So how can we add predictive analytics into the financial advice lifecycle, and we're having a lot of success doing that.
Yeah, so it's clear that AI can be used both in terms of dealing with the customer and giving a better experience, but also in terms of just the back office, making things run more smoothly. Now, we have a question, which is what jobs are at risk with AI, which I could also frame as what is the future of work for people who are in the financial services industry? Tim?
You just look for a job, different job, I think. No, to be serious, I want to refer to Tesla and the original Tesla, not the car company, who said that in the 21st century, robots will be doing the jobs that slaves were doing in ancient civilizations. And I reckon that sounds pretty good, because who wants to be doing those jobs today? They're still getting done. They're not very well paid. They're not very fun. The key thing that where humans have got an opportunity and advantage is things like EQ and especially creativity. So augmenting people as opposed to replacing people. I talk to a lot of companies, and some of the biggest companies in the country and the world, and they know not one of them has asked about replacing people. And in the example of building an IT services area for a very large financial institution, they said, I want a 10th virtual member of my team so my team can get out on the floor more. So that's augmenting them and using the things that humans are really good at. So is it going to change things? Yes. In particular, very specialist areas, computers and robots are very good at process in a very specific area. A lot of those will change. But as long as people stay in touch with that creative side and the ability to adapt, then they'll stay way ahead, augmented by computers.
Look, I agree with that wholeheartedly. The work that we're doing with clients, what we're observing is you've got to remember that AI might replace some of the things that a person does within their role, but not everything that they do. And the things that AI could potentially be configured to replicate are probably bad repetitive processes that we should never have been asking people to do anyway, right? So what we're seeing is people saying, look, these tools need to help us take the boring, mundane, mindless stuff out of people's roles. We need to redeploy those people into where they can really add value using their wonderful brains and their skills. We will help give them new skills because we still need them. And final point, we're seeing a real shift from people thinking about this tool needs to save me 0.7 of an FTE to this tool needs to come in and automate my processes to keep me safe from a risk and compliance point of view, because they're very consistent, they're very fast, and they're very reportable. And I'm really looking forward to getting those people onto working in different parts of the organisation.
Boosting productivity.
Yeah.
It's great, which is something that we're all focused on in New Zealand. So from our perspective, when we've been working with McCarthy Finch and looking at what AI can do for lawyers, I would say that the interesting question which comes up for us is if you take away all of the very basic level jobs, they're often what you use to train people to actually become good at the more complicated jobs that we want to free them up to do. Do people have any thoughts as to what kind of new training will be needed in a very AI-driven automated
you can still do
environment?
it to train, Jeremy, but it's not somewhere where you're going to spend your career, because if you start off doing some simple thing, and I know when I get asked still, and I'm over 40, I shouldn't have admitted that, to help with something like a VLOOKUP on Excel, that's great, I can go and do that still, but it's optional for me. But to give people options around what they're doing, because that, right, I learn this and then I can move on and build, work on my knowledge, build on my knowledge, and I can leave it to the machine to do it because they're very good at process.
Yeah, we have an M&A tool called Kira, which automates M&A due diligence, and I don't see much learning in a junior going through and learning how to find a clause in a document. I think the learning comes where you sit down with that junior and you teach them how to analyse that clause in that document. Yeah.
And this is a question from the floor for Brooke, and it ties together with if you automate processes and make things very easy, this is probably a consequence that follows. If investing should be as easy as online shopping, then how do you help customers understand the risk and ensure that they are making the right decision? So in a very automated user client-led environment, how do you look after that?
Yeah, and that's crucial element of investing, and especially with amounts. But so what we do at Sharesies is we look at how we build out our product in three ways. So first is access. So how are we making sure that investing is accessible as possible? And again, that's making sure that it's an engaging platform, but mostly, that the buy-in is $5 for each of the investments. Then the next, and that New Zealanders know they have access. Then the second is, okay, well, how are we building confidence? How are we building confidence that somebody knows that they're putting their dollar to the best work? And that's something that we do a lot at the moment through education tools, and also the way that we've structured the way you invest in terms of pulling out some key information from the product disclosure statement, such as the risk profile, the price history, and key information around the fund. But what we're building out more and more now, and what we're looking into, is how can we incorporate more aspects of advice into our platform, and be it Robo or whatever, we're looking at advice generally, is that how can we really help somebody know that their money is being put in the best possible place for them, because right now it's up to them to pick based on essentially their risk profile. And then the third key thing we're doing at Sharesies is around how do we motivate people to build their investment portfolio, and to ensure that money is a positive experience in their life, and so that's kind of the way that we look at it. So in terms of how we're ensuring customers understand risks, definitely pulling out the key aspects of the product disclosure statement, making we separate them into lower, medium and higher risk, and again it's $5 as a minimum, and so it's a lot around learning by doing, and our philosophy is that people should build their investment portfolio one payday at a time, and with amounts that they can afford.
Great. We've got a couple of questions that are sort of following on from that around Roboadvice specifically, and in particular, what compliance or how will compliance and legal professions need to evolve to assess if AI and Roboadvice is in the best interests of a customer? Jeff, do you want to talk about the how you actually train lawyers and financial people and the regulators to assess that?
Yeah, I certainly can't imagine and can't think of a single lawyer who would be best placed to say that any given financial advice is in the best interest of a customer. I think that's for the financial advisors too. And I think the way the Roboadvice exemption is drafted is that you need to have filtering for your customers. So the questions that you ask your customer in setting up your Roboadvice questionnaire before the algorithm does its magic needs to have questions that will segregate out those for whom the advice and platform clearly is not appropriate, those whose debts outweigh their assets, those whose income doesn't really match the amount that they're looking to invest, and then those filtering questions allow you to give those customers personal attention, not through the Roboadvice system. Obviously, the benefits of Roboadvice, as was mentioned before, is that you get consistency in the advice, and it automates it, and it rolls out, and it's consistent every time, which is why I think banks will like Roboadvice, because instead of going in and a teller being faced with a customer saying, what KiwiSaver should I go into, the teller will be able to say, fill in this questionnaire, and the algorithm will do its magic. In terms of, the filtering questions will get rid of the people who it's not suitable for. The flip side of the consistency is that if the algorithm is wrong, then it will be consistently wrong. So there is the current exemption requires the advice to be reviewed by an AFA, or the algorithm and the outputs. So there are checks and balances around ensuring that the advice is in the best interest of the customer.
Great. Now, because time's ticking on, we're going to do in good startup terms, a pivot to cybersecurity and fraud. And I'm just going to open it up and maybe start with Andy. Why is cybersecurity important for fintech businesses? And who are we watching out for? Who is it behind the attacks?
So look, it's critical. It's critical because when you're starting out, you're focused on meeting customer needs and doing it very elegantly and creating compelling experiences, and that's great. But the last thing you want to do is find yourself becoming medium-sized or even big, and not having laid down the foundations for a decent, secure architecture that protects your customers' data, protects your customers' experiences, and to be quite blunt, makes you a compelling and possible partner or acquisition for a big company, because that's the future for a lot of fintech startups. And there's a trail of fintech startups that have built beautiful solutions, been very elegant, but when they've gotten into a partnering or an acquisition situation with a bigger FS player, it's all fallen to pieces because there's been no security thought put into the development of the tech that underpins their proposition. So that's why I think it's really critically important. It's the second, when you go out and survey incumbents about they want to work with fintech startups, what are your concerns? Security and the development of security features into the fintech startups proposition is the second most important thing that they are concerned about.
And you can't retrofit this stuff.
You can't retrofit.
It's got to be baked in day one.
Yeah.
So that's the why do I think it's important. Who's behind the attacks? I went and saw our cyber team this morning to prepare for this question, and it's not lost on me. The biggest, the fastest growing part of PwC at the moment is the team of people who are working with clients on designing to mitigate cyber attacks and then helping clients fix things up after there have been cyber attacks. And they threw out that these cyber attacks are coming from countries. There are documented cases where countries have teams that are attacking other countries from a cyber point of view. Organised crime organisations are, seeing this as a great money-making lark. Insiders, I found this one interesting. Insiders is a very important group of people that we watch for, including ex-employees. Even one case where a cyber attack was performed by an owner, the ex-owner of an organisation that was acquired by a bigger player, and then a newly emerging one, political hacktivists. So that's my new word I've learned for the day, hacktivists. It's been seen as a very effective way to make some impact and be heard.
Great. Jack, you've done a lot of work in this sort of big data-driven space, and particularly in Europe. Do you lose sleep over protecting people's information?
We absolutely lose sleep over the risk of a large data breach. That is what keeps us up at night. It's look, we invest very heavily to make sure that doesn't happen. Absolutely. The kinds of fraud that are easily detected are more at the investor level. So you can detect a stolen debit card, for example. You can look for abnormal behaviour. That's the kind of area that we've had a lot of success in. But the large-scale data breach, as Andy was discussing, that's terrifying for us. I mean, it would be a multi-decade reputational issue if we were to do that, and that's why we spend so much money on it.
Great. Well, we're coming near to the end of the time, so to finish up, let's just go around the panel and maybe just give your outlook for New Zealand Inc. in terms of whether fintech is going to contribute to its growth. Is this a story that we should be selling internationally? Is it just a better way of dealing with our customers and not special, just day to day? And is it something that you're particularly focused on? So we'll start with Tim.
Yeah, I think New Zealand's in a unique position. For some reason, we seem to be able to build great software for both enterprise and financial services, and I see it all the time. All the people that I work with, we've got world-class advisors here and a really supportive ecosystem, so I don't see anyone who's complaining about it probably just isn't the one to talk to.
We reckon about 75% of FS organisations are already partnering with fintech startups in some form. So I think it's a real thing. I think our FS organisations are really embracing the fact that they've got a lot on. They're not necessarily the best people to build beautiful, compelling, customer-facing propositions, and they're increasingly seeing partnering as the way to go. Raised a really important question though, have those organisations got the partnering skills to actually work with some of these fintech startups in the future, because it's quite a different skill set for them. And then equally, to make it balanced, are the fintech startups if they are thinking about developing out propositions, and if they're thinking about partnering as a way of scaling quickly, are they developing out their propositions in a way that is actually solving an existing problem for a bigger FS player?
Great. Brooke?
Yeah, I think, New Zealand, we've traditionally been winners in this space. I mean, we were with FPOS, for instance, and it's like, well, I think there's a massive opportunity for New Zealand to reclaim that on the global stage. I think, there's time.
Great. Just quickly, Jack and Jeff?
Look, I've probably got a slightly darker view on this. I think, New Zealand needs to do more to nourish our human capital. I think I've lived overseas for quite a few years, and I think, there are countries the same size as New Zealand producing, 7 times as many STEM graduates. So I think if we want to be a leader in this space, we need to solve that problem. And it is a solvable problem, because New Zealand is a place that talent wants to live. Well, I can speak for Wellington anyway, if I'm not sure about Auckland.
Very controversial views all over. Jeff?
In terms of tech disruption, I'd love to see, having also coming from Wellington, I'd love to see someone with a bus tech idea. If we could fix that, that would be great. I mean, my view from a regulatory perspective, I think regulation sets the playing field, and I think New Zealand's got the regulatory playing field just right. But I think there could be more done to attract the best players to that playing field from a global perspective. We're seeing regulatory sandboxes set up around the world. There are moves amongst certain regulators to do an international sandbox. And I think that reflects the global jurisdictional competition going on for fintech business. I'd love to see New Zealand be a fintech hub, a place where fintechs want to come and set up and thrive, as well as grow our own. And so I think while we've got the playing field, we could be doing a little bit more to attract the best players to come here.
Great. Well, fintech, officially a thing. AI, it's not what you think, it's someone else or something else doing the thinking for you. So if you join me in thanking the panel, we'd thank you for your questions.